What is the best life insurance for married couples with workplace benefits? Imagine a future where you and your spouse feel confident about your financial security no matter what happens. That's what choosing the right life insurance can do for you. When you have workplace benefits, it adds a helpful layer but also some questions about what's enough. Let's look at how married couples can make the most of both employer plans and private policies. Most couples start with employer-sponsored group life insurance because it's usually low cost or free. These plans typically offer term life coverage, which means they pay out if the insured person passes away during a set time, often from 1 to 20 years. The coverage amount is often limited, like $50,000 or up to $100,000, which might not be enough for your family's needs. Also, if you leave your job, you usually lose this coverage, so it's important to think about adding more. Many married couples choose to buy additional life insurance policies that are separate from work benefits. Each spouse can get their own policy, which is called an individual policy. This gives you the chance to customize coverage based on your health, income, and debts. For example, if you have a mortgage, children, or other financial responsibilities, you might want a policy that covers to $100,000 or more. These policies can be term life, which lasts for a specific number of years, or permanent life, which lasts forever and can even build cash value over time. Another option is joint life insurance policies. These are single policies that cover both spouses. There are two types: first to die, which pays out when the first spouse passes away, and second to die, which pays after both spouses are gone. First to die policies are good if you want to ensure your surviving spouse can pay off debts or replace income quickly. Second to die policies are often used for estate planning or leaving money for children or grandchildren. They tend to cost less than two separate policies but offer less flexibility. If your workplace offers voluntary or supplemental spouse life insurance, you can add coverage for your partner through your employer's plan. This can be helpful if one spouse has little or no private coverage. But remember, this coverage depends on your job and may have limits. It's best to see this as a supplement, not the only protection. When planning your coverage, review what each of you already has through work. Think about your total needs for income replacement, paying off your mortgage, and covering your children's expenses. If gaps exist, consider buying extra private policies. You can also add spousal riders to existing policies, which give limited coverage for your partner within one plan. Permanent life insurance offers lifelong protection and can grow cash value, making it a good choice if you want long-term security. Term life is less expensive and works well if you only need coverage for a certain period, like until your children finish school or your mortgage is paid off. Talking openly about your financial goals and insurance needs during open enrollment periods helps you pick the best mix of workplace benefits and private policies. Combining employer plans with additional private coverage often provides the best protection for your family. It ensures you have enough coverage, flexibility, and peace of mind for both you and your spouse.